the top three performing countries from 1900 to 1980 was the United States, Australia, and South Africa. They almost were, as they say in Afrikaans, kop aan kop, annual returns over time, 9.5% to 10%, compounding in dollar terms year after year. So there's no question that the JSE, during that period of time, with the two world wars, with its boom in gold, diamond, chrome, manganese, platinum, was a fantastic place to be.
So Magnus Heystek here, former financial journalist, is actually on Biznews giving a really powerful lecture on how the Rand and South Africa's economy in general has actually lost its might, actually lost its reputation as what might have actually almost attained global power status, and how the economy actually lost all of that. Let's listen to what he has to say about this, and I'll be back on a short history of the South African Rand.
Yes. I was glancing through the annual book that Credit Suisse brings out. They call it The Triumph of the Optimist, and they calculate the investment returns of all major stock markets, including the JSE, going back to 1900. Now, who was around in that year? I don't think many of you, but the stats go back to 1900, believe it or not, and they calculate the running returns of the most major companies, including South Africa. Well, the top three performing countries from 1900 to 1980 was the United States, Australia, and South Africa. They almost were, as they say in Afrikaans, kop aan kop, annual returns over time, 9.5% to 10%, compounding in dollar terms year after year. So there's no question that the JSE, during that period of time, with the two world wars, with its boom in gold, diamond, chrome, manganese, platinum, was a fantastic place to be. 1980, when Alec and I were financial journalists, we could buy $1, with R1, we could buy $1.40. So we would give them a rand, and they would give us back $1.4. One of the strongest currencies in the world. The South Africans were well-traveled. They traveled the world. They were known as the biggest spenders in Europe, in London, America, and that was the stock. However, and this is where the context comes in, from 1940 to today, things changed very dramatically. The 80s and the 90s were not good periods of time for the JSE. In fact, it underperformed quite badly until about the year 2002, when we had two things that happened. First of all, we had China joining the World Trade Organization, and the demand for commodities went through the roof. So 23, 24, 25, 26, 27 were absolutely money-making years for asset managers, for investors. We had compound returns of 30, 40% was fairly common. We were in that market with value funds. Piet Viljoen would like to hear about that. We were stuck into John Beckard's value funds. We made enormous amounts of money for our clients because that's what the facts were telling us. We had the construction boom in South Africa in preparation for the World Cup 2010. And the residential property market was booming hand over fist. You can go look at the FNB stats. I looked the other day. Property prices were going up in South Africa from 2003 to 2008 at 25 to 35% year after year. Believe it or not, 2008, great financial crash, changed the rules, changed everything, and we had the big crash. And ever since then, South Africa has been in a little bit of a decline. And this is just a stat I get from a friend of mine. He did it for me this week. Claude Baysack, he's an economist making a name for himself. The black line is, of course, the GDP growth of South Africa. You can see there how the economy boomed in the early 2000s. 2007 was the peak. It was a peak in many respects for capital formation, for revenue generation. Our GDP, our budget deficit was 20% of GDP. I mean, it was fantastic. Ever since then, it's been on a long, slow decline. The yellow line is the projections done by the Treasury of South Africa on their growth forecasts. And the point is that they're generally over-optimistic when it comes to their forecasts, which has an impact on revenue generation, capital growth, unemployment or employment. So again, the risk is very high that they can overshoot their projections, which happened last week. And already economists and the Financial Mail and other commentators are saying, hopefully over-optimistic, which is going to have an impact on a lot of things. The net result is, of course, that the performance, and this is just, I took this just to lighten the mood a little bit, but the South African economy is in ICU. It's no question about it. It's trundling along at 1.5%, 0.3% GDP. I mean, it's been that way for a long time. In fact, in many sectors, our GDP per capita is now down 20 or 30% from 30 years ago. And we see it in many ways. We see it in personal wealth per capita. We see it in housing, in construction, etc. It's making us, as a country, as a whole, very poor. These are the facts that you cannot deny.
Yeah, what do you guys think? Really brilliant lecture. I learned so much, really powerful. And how, I remember when I came across an article at some point where it was argued that, South Africa was even once a nuclear power. I actually, I was really surprised at that time because I was just getting into South African history and really understand, because I had spent most of my time in academia studying West African history and getting to learn about, South Africa's might at the time was really interesting for me. And so this Magnus here in this video puts a lot of things into context for me to really understand how South Africa emerged as a really powerful global economic powerhouse compared to the likes of, Australia and, some of these powerful economies at the time, and how it's really dwindled down, across history to where it is now, today, where it's argued that, the rand is actually, as at 2012, which is the year this report was actually written on the history of the rand. In 2012, it was trading for 8.34, to the dollar. But update us in the comments. What's the rand trading for today? How low is it? And, where is the rand at the moment? But anyway, this is a really short history of South Africa's currency, the rand, the South African rand, written by Quinton Bronkhorst, in 2012. Really interesting article. I thought to really share and try to go through. So it speaks about how the rand was established as the official South African currency on 14th of February 1961, and it has since then developed into a liquid emerging market currency most commonly traded against the US dollar. Now, prior to its establishment as a legal tender, South Africa, as a British colony, operated under the British tender of pence, pounds, and shillings. Now, when the rand debuted, it traded at 2 rand to the pound, or 10 shillings to the rand, coming off the strong base of the South African pound, and as a yearly average, it was stronger than the US dollar, debuting at 72 cents to the dollar in 1961. This is really crazy now. So as at when the rand debuted it speaks about the strength of the economy of South Africa in 1961. So in 1961, the economy was so strong that it was the South African economy was actually much more compared to the pound and not even the dollar. So it was even stronger than the dollar, debuting at 72 cents to the dollar. Okay, so that's really crazy. 1961. But anyway, it speaks about a currency in decline. So despite enjoying strong value amid an ever-changing international economic climate, it was the system of apartheid in South Africa which ultimately caused the rand to lose its footing on the global market. So in June 1974, the South African authorities decided to delink the rand from the dollar and introduce a policy of independent managed floating. At the time, the rand was trading at 87 cents to the dollar. Now, speaking in 2001, the then SARB governor, Tito Mboweni, explained that during the period of 1974 to 1978, the level at which the rand was pegged to the dollar had been changed 6 times. Now, in 1990, there was a significant boom in the value of gold, which strengthened the rand's value. However, the same was true when the value of gold declined thereafter. Now, in 1983, the apartheid government abolished the financial rand exchange rate system, and key international banks refused to renew credit lines for South Africa, which forced the temporary closure of the foreign exchange market in the country. And now in 1985, the rand was at its worst level versus the dollar since its inception at 2.23 rand. Okay. Now let's go post-apartheid. Since the democratic elections in 1994, some normality has returned to South Africa's international relations, but the exchange rate of the rand against the dollar remained in a low-term downward trend that commenced in the early 1980s. The rand to dollar exchange in the post-apartheid South Africa has been largely impacted by national and international social, political, and economic events remaining in decline, just like Magnus describes here in this video. All the likes from COVID to the financial crisis in 72, and other events anyway have actually caused a lot of crash to the power of the rand post-apartheid. Political uncertainty surrounding the new government and the country saw the rand weaken to an average of 3.55 rand to the dollar in 1994. At the next presidential elections in 1999, the election of Thabo Mbeki as president sent the rand's value to an average of 6.11 rand. Now, the 2001 September 11 attacks, yes, this was one of the really major events that affected a lot of currencies in Africa, but also the rand is really interesting how it hits the rand. So it says that the 2001 September 11 attacks on the World Trade Center in the US caused the rand to skyrocket to 13.84 rand to the dollar, with a yearly average of 8.60 rand, its worst level ever, with a recovery period happening the following year. So it speaks about how the last decade has had its own fair share of issues, which impacted the rand-dollar exchange rate, particularly in the latter half of the decade, that is from 2007 onwards. It speaks about how local events such as increasing debt, socio-political unrest, and energy issues have kept the rand in a weakened position. We know that Eskom and load shedding must have really hit the rand a lot. Here it speaks about how Eskom's power crisis in 2007 caused major issues in the mining and telecommunications sector, ultimately leading to massive production cuts and mine closures. This has caused the rand's value to spike up from just 6 rand to the dollar in 2006 to over 7 rand in 2007. Most recently, the European sovereign debt crisis has made a massive impact on the global economy and, by extension, the local currency. Now, it speaks about how the euro crisis in itself, an extension of the global recession, which followed the global financial crisis in 2007, which sent global markets, South Africa included, into troubled waters. And by 3 p.m. actually, on September the 12th, 2012, the rand was trading at 8.34 rand to the dollar, under pressure from unrest in South Africa's mining sector, as well as continued uncertainty pertaining the Eurozone crisis. So we see that the Eurozone crisis actually affects the rand significantly, and that's really interesting, because I remember that this is one of the reasons why the likes of the West African, military leaders in Burkina Faso, in Mali, in Chad, are trying to fight to set themselves free from the use of the CFA franc, which was instituted under Charles de Gaulle's regime at the time. I think this was in 1958, when there was a monetary union that was proposed, by Charles de Gaulle. I think 14 of these countries that were former colonies of France actually agreed to join that monetary union, which upheld the use of CFA franc and actually demanded that, I think 60 to 70% of resources in these countries would be managed in a central bank in France. But the Secretary Guinea, the nation state Guinea, led by President Secretary at the time, who was a really good friend of Kwame Nkrumah, really refused to join that monetary union. As a result, many French civil servants left Guinea, burning down a lot of the things they had, come to Guinea with and all that. So it sent Guinea into a shock. But one of the reasons these generals now want to, set themselves free from the use of the CFA franc is to be able to refuse this pegging of their economies to the economy of the Eurozone and especially France. So whatever happens in that location, whatever happens with inflation in those regions wouldn't impact the currency, the use of the local currency in Burkina Faso. Some think it's a strength, some think it's a weakness anyway. But like in arguing how the Greek economy was kind of like held up, and now I think it's bounced back, but it was actually pegged as one of the pigs countries. So Portugal, Ireland, Greece, and Spain, I think these countries were kind of like, given the acronym pigs because, of their financial crisis. And although for me, I have a personal experience with Greece because I was in Thessaloniki most of those times in 2011 thereabout, when the economy actually really got really terrible. But I think for some reason the pegging of the euro, because the Greeks still used the euro at the time despite the difficulties that caused, but for some reason anyway, many saw it as a threat, many saw it as a weakness, but it was argued that it kind of like helped it stabilize, even though it was a harsh austerity period for Greece at the time. It's sort of like helped peg inflation levels to a really reasonable point, and saw Greece, I think, bouncing back slowly down to its feet. But the South African economy, especially the pegging of the rand to the eurozone area at the moment, where the eurozone crisis, for example, hit the South African rand terribly. I think it's something that probably might be needed to think through carefully and wonder how to go about that. But I know South Africa has a lot of really interesting economists and financial experts, like you see, like Magnus here in this video, really giving us really deep analysis of the character of the rand and how the rand has evolved in its trajectory over time. But this has been quite a lot of information. What do you guys think about this lecture by Magnus here in this video? Share your thoughts in the comments.